Hello. This is Green FX. Welcome to my YouTube channel. So today on this channel, I'm gonna be sharing with you the secret strategy that's gonna change your life. The secret strategy that you can use to actually change your way of trading to become profitable in the forex market. You see, 90% of the traders always lose out from profit. 90 to 95% of traders always lose out on trading. So just because not the problem is not just from the technicals, the problem is from the psychology. The same way your mindset, the mindset you have towards trading is the more reason why you lose trade. If you keep asking yourself why you lost trade, it's just your mindset, it's not just the technical. Because if you've known the technical, then you just have to look at the mindset. So this strategy is one of the best strategy that I've discovered. So the only problem you will have using this strategy is going to be your mindset. Your mindset is going to be just the problem. But this strategy is very simple and straightforward. So we're going to move to this strategy, and I would like you to watch this video to the end. Watch this video to the end so that you actually understand every single thing every single secret that I'm going to be exposing in this video. So first of all, before you do anything on the chart, before you take any trade, before any decision you make, whenever you come into the chart, the first thing you should always look out for is the trend of the market. So first of all, this is Euro USD, and we're going to be looking at the trend of the market. Now we'll go to a daily time frame. As you all know, I always check from the daily time frame because the daily time frame is the best place for you to check the trend of the market. So I always want to tell you this thing: if you come into a daily time frame or you open your chart and without drawing anything, without being told, you cannot identify the trend of the market, I will advise you that moment close your laptop and just go to sleep or go do something else, because trading is not meant to be complicated. We humans are the ones that make it look complicated. Trading is just you making it simple. You make profit. We are all here to make profit, so we are not here to actually complicate things. So trading isn't as hard as you think, but your mindset makes it look as if it's hard. So now in a daily time frame, identifying the trend without being told, you can see obviously that this market is trending down. It is a clear downtrend. You don't need any mathematician to tell you. You don't need any indicator to actually tell you. You don't need anything to tell you. With your eyes, you looking at the chart, you can actually identify clearly that this market is in a downtrend. So but I always make use of my trend line because I'm going to use it when analyzing from a lower time frame. Now I draw my trend line from this point, and you should always know what makes a trend line valid. A trend line is not valid until it has 1, 2, or 3 or more touches. That's just when your trend line is stronger. So if this trend line was like only one line here, then it's not a strong trend line. But when it has a multiple touches here, you can see how price reacts to this level. Let me bring out my arrow so that I can actually show you what I'm trying to say. So looking at this point here, you can see price react to this level, price react to this level. So this trend line has a multiple touch. So the price should come back to this trend line. It's definitely going to respect this trend line, or if it breaks, then you're looking at for buy to the upside. But I'm a day trader, and you watching this video, I believe you're a day trader. So we are only on the daily time frames to check out the trend of the market. So now, after drawing, I'm going to take in this so that I can differentiate it from the lower time frame trend line. So I'm going to take in that. So this is actually a downtrend, and I'm looking at this as a retracement. I'm looking at these levels as a retracement. This is just like a retracement. This level is like a retracement. This is what I'm looking at for. This level is like this level is a retracement, not like a retracement. This level it's a retracement. So let's go to a 4-hour time frame. So now in the 4-hour time frame, what are you obviously looking at? In the 4-hour time frame, what you always want to do is to mark out your key levels. What is key levels? Key levels are those levels that price reacts multiple times. So to make your key levels valid, you have to make sure it has multiple touches. Price have to react to that level multiple times. That's what makes your level a key level. Now looking at the candlestick chart, sometimes the wicks make it complicated to actually spot out those key levels. So the best way I actually spot out key level is turning this candlestick chart into a line chart. Now a line chart will now show me how the main levels where price reacted to, because the line chart is actually the main move of the market. So the candlestick is just like a picture of the market. So the main market is the line chart. So now with this line chart, I can actually easily spot my key level. So now looking at this point here, looking at this point here, you can see that there's a level here. There's a level here. You can see clearly, very obvious that there's a level here, and I'm going to show you how price react to these levels. Now, looking at here, price reacted to this level here, price reacted here, price reacted here, price also reacted here, price reacted here. This is in multiple touches. Price made so many touches at the same level. So, telling you that whenever price comes to this level, it will always want to react to this level because this level is a strong level. Back in the history, price have been reacting to this level. So, price coming back to this level, it always react to this level. Now, I'm seeing another key level above here, so this is also a key level. Now you can see how price reacted to this level here, price reacted here, price reacted here. There was some kind of consolidation reaction here, so this is also a valid key level. So I'm going to make one more key level here. So this is another key level. There is another key level. You can see obviously how price react to these levels. You can see how price react to this level. React here, there was a reaction here, there was a reaction here. So this is a valid key point where price is reacting to. Now after drawing out your key level, let's move to a candlestick chart. Now you can see now it's very clear and obvious now that there was actually a reaction at these levels. So what we do now, we go to a 1 hour time frame. Now going to a 1 hour time frame, what are you looking at for on a 1 hour time frame? What you should be looking at for is those current supply those current support and resistance levels. Now at the 1 hour time frame is where you draw your zones, where you mark out your zones for price to react to. First of all, looking at this, you can see that price is actually trending to the downside on a 1 hour time frame, and price is at a key level here. So when price is at a key level, what will you be looking at for? As this key level serve as a strong key support level, so you're looking at for buys. And when price gets to this level, you're looking at for sell, but you don't just want to take those decisions. So you have to make your analysis clear and clean. So what I do now, I bring out my trend line. And I told you that trend line is valid when it has multiple touches. So when your trend line has multiple touches, it makes it to be valid, and it makes you confirm that price is actually going to react when it comes to that level again. So you can see at this point, price reacted at this point. So I have to draw my trend line from that touch down to the downside. Sorry. Price reacted here, so I'm going to fix this from here. Let me fix this from here. From there, price reacted to this level. So okay, now this is a trend line. You can see how price reacted to this level. There was a reaction here, and price created a high here. So I had to join these two highs. You can see whenever price gets to this level, you can see the reaction price gave here. Price sold to the downside, and now price is coming back to the same level. You can see, guys, price is coming back to the same level. So the same thing goes to my support and resistance. Whenever I'm drawing my support and resistance, I also want to turn my candlestick to a line chart so that I can spot those key support areas where price react to. And also a strong support, we have what we call strong support and weak support. Those strong support are those support levels where price react to multiple times, while the weak support is just a break of structure where price just react only once and we are expecting price to react again. So I'm going to show you an example of a weak support level. I'm going to show you an example of a week. We are still on the strategy, so I want you to watch this video to the end and make sure you subscribe to this channel so that you'll be the first person to be notified whenever I drop a video. Turn on your notification also. Now, for a week's support and resistance level, this is a support zone. You can see price reacted to this level. Now, price breaking below this support level now. Price breaking below this support level, it has turned to become a resistance now for price. So this is not a strong level until price come to this level and react to it. Now you can see that price actually came to this level and react to this level before selling to the downside. So if price have reacted to this level first and price came back again, reacted to this level, there was still a rejection at this zone. Now this support zone, this to tell you that this zone is a very strong zone, and whatever will make price come back to this zone, there's going to be a reaction also again. So this was a structure, and price broke here. This is also a structure here. There's also a structure here. This is a structure here. So I always want to put my support and resistance at a structure. So I always want it to align with a structure, because when it aligns with the market structure, it makes it more valid and more strong. So now after drawing out, this is my support turning to resistance. So this is the level. Price has been making some kind of reaction to this level. So now on this market, now what am I looking for? By the time I was making this video, this was like an Asian section. So I'm waiting for London session for me to take reaction on this trade. So for now, I'll just be watching at the market. So when it's London session, there's this pattern I always look at for, and this candlestick pattern. I want price to actually break this level, react to this support level, and show me a candlestick confirmation. Now there are different candlestick, Japanese candlestick that you know, but I always make use of different candlestick, three different candlestick. Now, which is the engulfing candlestick, the Arami candlestick, and the morning stroke evening star candlestick. Those are the best candlestick you should be always looking out for before taking any decision on your trade, before taking any decision. Those should be your confirmation candlestick. I always make use of this candlestick, these three different candlestick. Now, what will you be looking? Which kind of candlestick will you be looking at for here? You'll be waiting for price to actually get to this level. Instead that price gets to this level and show you a candlestick formation, or price break above this level and retest and shows you a candlestick confirmation for you to go in for a long. But for now, we wait for price, because this is a Asian section. On Euro USD, will be doing some kind of consolidation around this level. There are no decisions, there are no liquidity, there are no money in the market, there's no liquidity in the market right now, so price is just ranging. So we wait for London break, which is the biggest session in the world, where price always always develop a high volatility in the market. So we're waiting for London session. I always trade London session. My strategy is based on London session. I don't trade any other session, only London session stroke New York session. I take my trade from London to New York, I close out, and whether in profit or in break even or in loss, I just believe that I follow my plan. So guys, I believe you actually enjoyed this video. I want you to just subscribe to this channel, turn on the notification button, so that you will be the first person to be notified whenever I drop a video on this channel.